Good morning, everyone. Trust we are doing good. Welcome to another webinar that we've got in store for you. Today, we'll be talking about the Smart Trader's Guide to Momentum Trading, and I'm your host, Akinwale Chibuike. And yeah, we'll do the fun thing we've always been doing on webinars, which is learn. Okay, we'll be learning about a lot of things when it comes to momentum trading, the financial markets, and it's going to be a blast. Let's just put it that way. Okay, here's a quick one. If you can hear me properly, please drop a message in the chat box. Good morning, everybody. Good morning, Aflabi. If you can hear me, let's drop a message in the chat box. Thank you. Let's drop a message in the chat box if you can hear me. Also, if you've got something to say to me, you could use the chat box. And if you've got a question to ask, please use the question section. I'll be sending out polls regularly. Let's do well to attend to the polls. It won't take us a lot of time, just a few clicks and we're done with the polls, okay? Yeah, it's glad to see the numbers actually increasing. And I'm glad a few people I called, they were able to hop on the call. Good morning, Precious. How you doing? I remember I've been calling you a lot since like last week, last 2 weeks. Good morning, Latifa. I called you and you responded to my call. Thank you very much. Good morning, Aflabi. Good morning, Goodness. And good morning, Dixon. Okay. Yeah. So without wasting much time, let's talk about you global markets first. Okay. EV Global Markets, it's an African-owned broker, and we offer you the global financial markets as a service. Okay, we give you access to trade the global financial markets, and we have a lot of products for you. We have the MT4, the cloud trade, and the copy trade. Okay, we have more products coming out for all our clients. Okay, so the MT4 is where you could trade the global financial markets in dollars or in a foreign currency. Let's put it that way. And the cloud trade is where you could trade the financial markets in naira. Okay, you could trade the global financial markets in our local currency, which is naira. And the copy trade is a platform for everybody. Also, the copy trade platform is the platform where we offer you access to traders that you could actually copy their trades and make money. So if you're that type of person who is busy, can't always look at the charts, or you feel you don't want to learn about trading, you just want someone to do it for you, the copy trading platform is what you should opt for. Okay, that way you have time to do other things and you have time to money is being made in the process also. You just it's a common logic where you're not working with your earning. That's the logic behind the copy trading platform. Okay, so it's actually great to have everybody here again this week. And without wasting much time, let's hop into what we have today. But before we proceed, if you were on the last webinar that we had, can anybody at all remind me the topic? Okay, just a quick brush on what we discussed the last time. Anybody at all, if you were on the last webinar, can you just say the topic in the chat box? Okay, let me know those that are following. Okay, anybody at all? Anybody at all? Topic on the last webinar that we had. Anyone at all? Morning. Okay, anyone at all? The topic on the last webinar that we had. If you were on the last webinar that we had, I'd love to get a response. I can see a few persons typing. Oh, this is your first time. I'm glad, Dixon. I hope you'd learn a lot and start applying it towards the financial markets. I think Precious was on the last call, so she should have something for us. Okay, since everybody's taking time to actually remember the topic. Okay, what we had on the last webinar was how to find and create and trade forex trends. Okay, how to find and trade forex trend. Yeah, close enough, Precious. But that was what we discussed the last 2 weeks, not last week. Okay, how to find and trade forex trends. Now we discussed how to find trends, how to define trends, how to understand trends, and how to capitalize on it by making money from it. Okay. We talked about all of that in the previous webinar. The replays are available on our YouTube channel. You could go watch it on our YouTube channel. Okay, so since we don't have anyone who joined the last webinar on this current call, let's just dive right into what we have today. So the Smart Trader's Guide to Momentum Trading. Okay, yeah, we held a class during the holiday. Like I always tell you, we're here for you, holidays or not. We are always here for you. We've got always got something for you. Okay, so Smart Trader's Guide to Momentum Trading. And let's dive right into it. Let's see what we have on the list of contents that we're talking about today. So, momentum trading. What is momentum in Forex? Types of momentum in price, how to read momentum in price, and trading momentum. Then the conclusion of everything we're talking about today. So, um, can anybody give me their own thoughts of what they think momentum is? Anyone at all? What do you think momentum is in the financial markets? Okay, I think we have something. Increase in price like volatility, relatively. Okay, there was one time when we had an AMA session, I explained volatility, momentum, and the likes. I explained like the four concepts I talked about: volatility, momentum, volume. I explained all of that. Yeah. Now we're all getting it. Increase in price, strength, that kind of thoughts in price actually. Okay. Now, when we say the rate of change, okay, the rate of change is just what momentum is all about. The rate of change. Now we'll be doing a little bit of physics on this webinar, okay. We'll be doing a little bit of physics, but we'll be relating this part of trading or the part of physics to trading, okay? So I want us all to pay good attention and let's get a pen and a paper to take notes also, okay? So when we say momentum in the financial market, it means the acceleration of price in a certain direction in the financial market, okay? Acceleration of price relating to the strength it is trading in a certain direction in the financial market, okay? How fast price is trading with the strength towards it in the financial markets. Now, let me look for a very good example to life example actually to explain that. Okay, so we said how fast. When we're talking about fast, I really love cars. Like everybody knows on the webinar, I talk about cars a lot. And fast, we're talking about a Ferrari, okay, or a Lamborghini or W Motors, any one of that. And when we're talking about acceleration, these cars are very, very fast. Now, we said the strength. If we are looking for fast and strength, we can now start talking about a Tesla Cybertruck, right? So it moves very fast and it has a lot of strength. Like it could carry a lot of a lot of things and still move very fast. Now, when we're done talking about strength, speed, and direction, we could now say that okay, a Ferrari has speed, but can't carry a lot of load, same as a Lamborghini and same as W Motors. But when it comes to a Tesla Cybertruck can actually um, move very fast, carry a lot of load, and go a certain direction for a long period of time. Do we all understand? So that's just the relation between momentum when we talk about cars. Now, like I said previously, I said momentum when it comes to trading is when you are involved in the speed of price, that's the acceleration of price in a strong trending market. Okay. in the strong trending direction of price. Do we all understand? Can you hear me now? Precious, can you hear me now? Okay, great. Did you miss out on anything I said? If you did miss out, please let me know, okay? So I can actually go back and explain. If you did miss out on anything, let me know. Okay, so I talked about momentum and I said momentum, we're talking about acceleration, that's speed. We're talking about direction and we're talking about strength. Okay, acceleration, speed, direction. Sorry, direction, acceleration, which is relative to speed. Then what? Strength. Now, I said I will be using an example of cars because I really like cars. And if we're talking about speed, we're talking about a Ferrari, a Lamborghini, or the W Motors. And when we're talking about strength, we're talking about trucks, okay, or this bulldozers, those kind of thing. And when we're talking about direction, we're just saying a location like from Lagos to Ibadan, something like that, or from New York to California, something like that. Now, when we're talking about cars, a car will just surely be good for one thing, not all things. But now trying to look for all this factor in a car, we'll be talking about a Tesla Cybertruck, which has speed, it has strength to lift a lot of things or to transport a lot of things, and it can also go a long direction. So we're saying if we were to relate momentum to a car, we'll be talking about a Cybertruck, a Tesla Cybertruck. Do you understand now, Precious? Please let me know if you don't understand so I can proceed. Great. Now I said let's actually branch into science. Okay, a little bit of physics into this. Now, momentum is described in physics as the product of mass and velocity. Okay, the product of mass and velocity. Now, if we relate that to the financial markets, it won't be the product of mass anymore. It will be the volume of money and the direction in which that money is coming into the market from. Okay, so if we understand the volume of money at that moment or the volume of liquidity in price at that moment, the direction the liquidity is coming from will actually determine how far or how quick price can trade. Do we all understand? Do we all understand? Okay, we said the volume of money in the market, we should understand where the money is coming in from, then we can determine how quick and how fast price can trade. Okay, great. I'm glad that we all understand that. Now, understanding this in normal science terms, we can relate it to the financial markets, which is what? Liquidity multiplied by when liquidity is coming into the market. This is just a thesis from me, okay? That's how you just understand momentum, and that is what momentum is in the financial markets. Now, when we say types of momentum, the types of momentum in the financial markets. Now, the types of momentum in the financial markets can be determined by the type of momentum indicator you're using. Okay? We can determine that by the type of momentum indicator you are using to determine price. Okay, so in general science, they would say we have linear momentum. In general, they say we have linear momentum, and that is what is actually in the financial markets. We only have linear momentum in the financial market, which means price, volume of money will come into price, and price will trade in a certain direction. Do we all understand that? Do we all understand that? Like, we only have linear momentum. That's why you see price can only go up and down or consolidate for a while. Even while it's consolidating, it is moving towards a certain direction in price. Okay, no. Now, what aspect, please? Let me know what aspect you didn't understand so I can explain again. Please let me know what aspect, where is it about the types of momentum in price? Is it about the types of momentum in price? If it's there, please let me know. Yeah, that's what I'm trying to explain. I haven't even gone into it at all. Okay. I said we have a single type of momentum in the financial market, which is linear momentum. You see the way this person is moving up, that's linear. That's linear, okay? It's actually trading in a certain direction. We only have linear momentum in the financial markets. Okay. And when I say linear momentum, we are just talking about the fact that price will relate to time and trade in a certain direction. Okay. Price will relate to time and trade in a certain direction. Once we understand that $50 million came into the markets, price will trade faster. If every single time $50 million comes into the financial markets every single day, price will move in a certain way. Okay. If we understand that, okay, today $50 million, $100 million came into the market, you understand that, okay, price will move in another way, but still the same way, but just in another way. It might be very, very fast or not that fast. I hope you understand, like very, very fast or not that fast, even if the money is. Sincere apologies for the break. Did you get the part where I talked about price? If there was an increase in the liquidity, price would trade faster. If there was reduction in the liquidity, price would trade slower. Did you get that part? Yeah, you will surely get a replay on our YouTube channel. Okay. Okay. I said if there is an increase in liquidity, that means if the money in the financial market comes in, price will trade very, very fast. And if the money in the financial market is reduced, price will trade a bit slow. That's the concept of momentum right there. And that's what linear momentum revolves around. Okay. It resonates around the fact that once there is more money, price trades faster. Once there is less money, price doesn't trade faster. Do we all understand? Great, great, great. Now, exactly, I'm going to show you how. Okay, I'm going to show you how you know that there is massive momentum in price and there's no longer massive momentum in price. I'm going to show you how there's no need to rush it. Okay, so we've talked about what is momentum in forex and the type of momentum in price. Now, how do you read momentum in price? And come here, let me get my my whiteboard on the screen. Trying to get my whiteboard on the screen. A few minutes. Okay. Can you see my whiteboard now? If you can see my whiteboard, please let me know. If you can see a whiteboard on the screen, please let me know. Can you? Okay, great. Now, the question is how to read momentum in price. Now, I want to believe that everybody knows what a candlestick is, right? You know what a Japanese candlestick is, right? Yes or no? Do you know what a Japanese candlestick is? Or a candlestick? Okay, great. Now that we all understand what a Japanese candlestick is, let's start from that perspective. Okay. Now, you would understand that when price forms in different ways. Trying to get a setting on here. Okay, so everyone would agree with me that this is a bullish candlestick, right? It's just a diagram trying to explain. So I'm just like an assumption that okay, this is a bullish candlestick, right? So we can all assume that this is a bullish candlestick, right? Great. Now that we can all assume that this is a bullish candlestick, let's get another candlestick drawn right here. We can still agree that this is a bullish candlestick also. Trying to draw it quite perfect actually. Let's just delete that, okay? So let me try to draw it quite perfect. Okay, great. We can also agree that this is also a bullish candlestick, right? This small one right here. Can we also agree to that? Now, first, can anyone tell me the difference between these two candlesticks? Can anyone tell me the difference between these two candlesticks? Anyone at all? Anyone at all? Can anyone tell me the difference between these two candlesticks? Okay, one is bigger than the other, right? That's where I actually want to drive at. Now that you understand one is bigger than the other, which one has momentum? Which one doesn't have momentum? Is it the big one or the small one? Exactly. Now you just understood how to track momentum yourself. Once the bigger the candle, it just shows you that there's momentum in price at that moment. Okay. When you start seeing big candlesticks form in price, you need to understand that okay, there's momentum in price at that moment. Okay, but there's momentum in price at that time. So you need to capitalize on the fact that there's momentum in price at that moment and make the max money from that. Sylvester, do you understand? Brilliant. Now, I didn't get what you mean. Do you mind breaking it down? Now that you understand that the bigger the candle, once the candle is big, it states that there's momentum in price at that moment. You already know what you're looking out for in price. Big candles. Now, how do you understand the momentum at that moment? There's an indicator you can use which is called the MACD. Okay, MACD, moving average cross divergence. Yeah, I think that's what it's called. Moving average cross divergence. It's an oscillator actually. Well, there are others you could use with like the RSI, the CCI, and the stochastic, but I prefer using the MACD or the RSI. But let's talk about the MACD today. Now, let's add the MACD to our screen. Now, you can see the MACD right here. Let's just turn this on and go to okay, great. Now, how do you spot momentum using the MACD? The MACD has two lines, okay? We have the fast moving line and the slow moving line on the MACD. What it just tells you is the first one, the first line is the simple, and the second line is the fast, okay? One line has a greater period than the other, which is 12 and 26. That's what the line is all about. Now, how do you use it to identify momentum? Once the line crosses the histogram and trades higher than the histogram, it tells you that momentum in price has shifted bullish. When it crosses lower, it tells you momentum in price has shifted bearish. That's all what it means. And that's how you easily use it to spot momentum. When you understand momentum in price at that moment, you can easily make trading decisions and capitalize on that, like make a lot of money from the financial markets, just making trading decisions of the MACD. And I use it on the daily time frame mostly, okay? On the daily time frame mostly. And also, there is another thing. Instead of using the MACD, if you're someone that is not comfortable using the MACD, you can actually use price action. Now, price action in what sense? You understand the movement of price. You understand how price is moving or where price is likely to move to. That's when you consider using the price action. But I prefer to use the MACD. It's easy and can be seen clearly. So let's take AED card as a case study today. Okay. And that we are talking about trading momentum in this instance now. We're talking about trading momentum right now. So, how do you trade momentum? When you confirm momentum on the daily time frame, okay, momentum is bearish right here. We can all see that momentum is bearish. Even the histogram confirms it. We can now reduce our MACD and see if we can capitalize on that. So we're only checking the MACD on the daily time frame. We understand the histogram is bearish. Momentum is also bearish, and price can't just continue going down forever. We need to understand that factor. So what we do is we try as much as possible to use tools that could help us understand price better. So the tool I've settled for today is the trend line. So I'm using trend lines a lot. Now I'm not trading the trend line because of price came into the trend line. I'm only trying to get a concept of price around the trend line. Okay. So looking at this, price is bearish. The trend line did made me understand that price is bearish. So understanding that price is bearish, price can be bearish forever. We see impulse here, correction here, impulse here. We're expecting some sort of correction. Okay. So What can I be expecting in price? I can go down to the 4 hour time frame now. On the 4 hour time frame, I want to see reasons to actually either want to trade against momentum or wait and trade in alignment to momentum. So I can adjust this properly right here. Great. Now we had impulse correction, impulse correction, impulse. At every single time we're having impulse and corrections. Now, this is generally a double bottom to me. I don't really trade the concepts behind double bottom, but today we'll be trading the concepts behind double bottom. And look at what we had right here. So we want to be concerned about this whole piece of price action right here. Everything in that green box is what we want to be concerned about. So we can go down to the 1 hour time frame now. And on the 1 hour time frame, we want to understand what price is giving us. Okay, we want to understand what price is giving us. Now let's look at it right here. Price found support at this bearish order block right there. Price found support there. So what's this telling me? This is telling me that this was a previous breaking market structure. This was a previous breaking market structure. Okay. And we traded higher, but we had to come down to this support to trade higher and look at it closely. This is a previous high right here. And zoom in also, this is a previous high right here. And looking at this small piece of downtrend here, we had this high. And what do we have? We had a break in market structure there. Okay. So this piece of price action right here is bullish to me. So where would I, or how would I want to capitalize on this right here? I want to capitalize on this by adding the MACD. I want momentum to change on the, sorry. I want momentum to change on the daily, on the 1 hour time frame right now. So since I'm on the 1 hour time frame, I want momentum to change. Okay, great. Now, what do we have? Price has crossed to the upside. The histogram is green. This is telling me that momentum has changed. So what will I be looking for? I'm looking for buying opportunities on AUD card. Now, I can decide to be aggressive on this or go slow on it. It depends on me, or it depends on the type of trader I am. But if we talk about being aggressive on it, I could just like place the trade at current market price right here with my stop loss. I would have placed my stop loss below this low if my entry was somewhere around here, but I'm trying to play it safe. So my stop loss could be around 20 pips or 15 pips actually. Then my first take profits at this old high right here. That's a 1 to 3 risk to reward ratio. I'm risking 15 pips. I'll be getting 45 pips in return, but I'm trying to make this entry more precise. So I can say, okay, I'll get my entry somewhere around here. Well, price already traded back there. So you still have to like settle with this entry. And knowing that momentum is already changed, we might see price come back into this area right here. So I can actually risk make my entry at this area because I like using limit orders and stop orders. So I can reach 5 pips to get 50 pips. Okay, so that's a 1 to 5 risk to reward ratio right here. That's what I might be capitalizing on if price does this. So I expect price to trade lower back into this area, then we skyrocket higher, then goes anywhere it likes from there. So that's how I capitalize on momentum when it comes to trading. Because above this high right here, we just have liquidity at this high. So this is where I believe liquidity will come into this market. Price has to trade to that high, then liquidity comes into the market and we trade lower, liquidity gets in, then we clear liquidity, move there and move higher further. That's how I just approach price when we relate it to momentum every single time I trade. So you see, it's very, very easy to understand how momentum works in the financial market and how you could capitalize on it. So, is there any question at all before we proceed into concluding everything we've discussed? Any question at all? Do we all understand? We'd love to get response. Let's do well to use the chat box. Let's do well to respond in the chat box. Okay, great. It will be on our YouTube channel. Where exactly, Dixon? Please let me know. Yeah, the replay will be available on our YouTube channel. We've got nothing to worry about. Exactly, that's what I explained. When the candles start trading largely, you understand that there's an inflow of cash into the financial markets. I explained that while talking about it on the charts. I could go over it again one more time for your sake. So let's go. Um, let's do it again. Let's do it again. Okay, great. Let's go back to the daily time frame, man. Okay, great. So look at this right here, where this crossed. Let's look at this right here. Look at this crossover to the downside. Look at what happened to this candlestick. This candlestick was very, very large. And what happened? Momentum came in. After that candle signified change in momentum, the MACD also confirmed that we started moving to the downside. Now look at this, where this cross happened also down here. Look at it right here. The candlestick was what? Large. It showed us that momentum was changing to the upside. And look at what happened. It traded lower a bit and we traded higher. Look at this right here again. This crossover right here. Look at the candle. Large. We went to the downside. Also, right here, money came into the market, cash inflow, and we went to the downside also. Yes, yes, yes. I said I was going to trade against momentum. I stated it that I was going to trade against momentum. Why? Because what? I combined the concept of trend lines. Like I expected impulse, correction, impulse. I was expecting a correction to the upside. So I wanted to trade the correction before trading the impulse to the downside. That's continuing the momentum to the downside. I said price can never continue going down, 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 down. It went down for a while, it had to correct itself. Went down for a while, it has to correct itself. That was why I said I'll be looking to go long before going short on AED card. Sorry. Do you understand now, Olutayo? Do you understand now? Please let me know if you don't understand. And Dixon, do you understand now also? Please let me know. Great. Olutayo, what about you? Okay, I believe he understood. So that would actually bring us to the end of this webinar. But before we end the webinar, I've got something for everyone. Please let's do all to respond to those polls. I'd be glad if we all respond to it. Please let's do all to respond to the whole polls I just dropped. Thank you. The theory in numbers, please let's do all to respond to it. Be glad if we all responded to it. Okay. And also let's ask questions if you still have questions. Let's use the chat box if you still have something to say. And now let's while we're responding to the polls, let's do all to continue responding to the polls. Now let me just do a roundup on everything we talked about. So what we talked about in general was relating. I thought they've sent that out. Don't worry, you would get it. Never, don't worry about that. So what I want to talk about or conclude on is the fact that every single thing we do in the financial market, let's relate it to momentum. Everything we do in the financial market based on momentum, we can actually implement it on the charts. Okay, every single thing we talked about today, we can implement it on the charts. We said momentum, increase in money, speed, and also direction of price. Once you know that, you can use that to make a lot of money from the financial market. And we talked about using an indicator, MACD, to define momentum in price. And also, you could use price action. And remember, you can't just use momentum, you have to use it or you have to add it to a tool to get the max out of it. Okay. And that will bring us to the end of our webinar today. We've got another webinar on Thursday, same time, and I would love to see you on the webinar. Okay, what's the cost of increase in cash in the financial markets? What's the cost? Let's now relate it to um real life. What's the cost of increase in fuel? What's the cost of increase in groceries? Those are the questions. Now relate the same answer to that. You'd understand that there was excitation at that period of time. That was why, okay, they believe that let's add more money, or they understood that price needs to trade to a certain level. Price needs to go from 1 to 10. Price needs to go from 10 to 50. When you understand that price needs to go from 10 to 50, you know that you need to put more money in the financial market for price to go from 10 to 50. That's it. Okay. We actually have plans scheduled for weekend webinars. You've got nothing to worry about. The webinar will be available on our YouTube channel immediately after this call drops. Okay, after we're done with the webinar. Okay, so no, this is not a 30 minutes webinar. This is actually for 30 minutes. Our webinars are longer than this, but we've got a lot of things to attend to in the office. That's why. Okay, if you go out to check our YouTube channel, you see that there's a lot of webinars that lasted for 2 hours, 1 hour, 30 minutes. And just for today, actually, that's why we're keeping it short. Okay, let me just drop the link to our YouTube channel for everyone so they can actually get access to it. Yes, that's the link in the chat box. And this brings us to the end of today's webinar. Thank you very much for joining. I expect to see you on the webinar that we'll be having on Thursday. Goodbye.